Hello everyone and welcome to this edition of Money Matters. I'm Ann Baldwin of Baldwin Media Marketing, and on this program we're talking about refinancing and home loan rates. The leaves are changing and so have interest rates. Home loan rates have increased almost a full percentage point in a very short period of time. After 24 months prior to that, they were at an all-time low. Well, this increase has had an immediate impact on people still hoping to refinance at what were the lowest rates ever offered. But how did it affect those looking for a new home? Here to tell us a bit more about why home buyers and those looking to refinance should not fear the rising interest rates is Matt Morrell, Vice President and Home Loan Sales Manager for Simsbury Bank. Matt, thanks you for being on the program today.
Thank you, Ann. Good to see you.
So I guess the first question that to kind of go in a sequence here is what has caused, this roller coaster ride in interest rates? Up, a little bit down, up again. What's the reason for that?
Yeah, the biggest thing to hit the financial news of recent history is earlier this summer when rates took an immediate increase of a full percentage point off of the news that the Federal Reserve was thinking about considering to curtail some of the easement features that they've been doing lately in the economy. Although Ben Bernanke was very clear to say this is something that may happen in the near future, there was no immediate action taken, but the markets reacted immediately. And as a result, within a 2 to 3 week period, we saw fixed rate mortgages jump almost a full percent in a very short period of time.
Now, I know that at Simsbury Bank and at other financial institutions, when those interest rates dropped, they saw a surge of people rushing out to refinance. And I've heard a lot of my friends and a lot of people, saying, oh, I've missed the boat. Is that true? Have people missed the boat on those low rates?
In some respects. And what was very interesting was as low as rates were, people were still waiting for just a little bit lower. And then when they took this dramatic turn, a lot of people were left out in the cold. However, this rise in interest rates signals larger things in the economy. Part of which is perhaps housing prices are going to start increasing and some of the things in the financial markets are going to get better for people. So some people will get back into the refinance game simply because now they can. Their houses have reappreciated, which hasn't happened in several years.
Right.
So the refinance opportunities aren't entirely gone, but for many people they did in fact miss the boat.
Is it, my perception or is it reality that I look at it kind of like a teeter-totter in the mortgage business? When interest rates go down, home values go down and vice versa. Is that correct? Is there any kind of a correlation? And, and how many people are kicking themselves, like you said, saying, I should have done it, but I'm going to wait a little bit longer. When you see a lower rate than what you've got, what percentage point should it go down for you to say, whether it goes down anymore, I've got to jump in this game now?
The first part of your question is interesting. They are related, but they're reactionary to the markets. So in other words, rates went down because we had to start stimulating the economy, and we had to start stimulating the economy because housing prices went down. So it's kind of a direct relationship. As far as when does it make sense, there used to be a cardinal rule, 2%. And if it's anything less than that, it doesn't make sense to refinance. But we refinance for so many different reasons now. It's not just to get a lower interest rate. It's to shorten our term. It's to extend our term sometimes to ease our cash flow. It's to send the kids to college. It's to put the back on the house that add the new bedroom. So it's no longer a hard fast, 2% makes sense. It's what does the big picture look like and what are you getting out of the refinance?
Absolutely. And we're speaking with Matt Morrell. You're the Vice President and Home Loan Manager at Simsbury Bank, a fairly new position as Simsbury Bank has really kind of merged itself and emerged itself into the mortgage business, both here in Connecticut and Western Massachusetts. So why now? Why did you feel that it's a good time to break into this business, and what do you have to offer your customers that we should know about?
Community banking has become vogue again, and we're very excited to see it because we've always believed in it. From the mortgage industry standpoint, since 2006, really, there have been very, very incredible things happening in the mortgage market, which have made people's focus shift from mortgage brokers to large banks to community banking. And we're really enjoying the benefit of people wanting to get more organic, get more local with their mortgage business. So we've seen that as an opportunity, and we're excited to bring what we do on a daily basis to more and more customers. So although historically we've done much of our business in the Farmington Valley, we're really reaching out. We're licensed to lend in Massachusetts, Connecticut, and Rhode Island. So many small banks are recognizing that we have a model that works and that people want, and that we can provide them the kind of service that a lot of folks are no longer getting from the larger institutions or from the mortgage brokers.
And you make a good point. And I remember going back 25 years, I guess it's been, since I last obtained my last mortgage. I just remember what seemed at the time to just be this mound of paperwork and detail that they wanted, in order for you to get a mortgage. And to me, that process just is a little bit of a deterrent. What kinds of things should people have in order, whether you said you're taking out a second mortgage on your home or you're refinancing, what kind of things do you need to submit to make this a smooth process? So if somebody out there is watching this program saying, okay, let me go to my junk drawer and get organized, what should they have organized?
It's such a great question because we've gone full circle. We were very highly documented process, and then in the mid 2000s, we got away from that. We had these low doc type products and low documentation, whereby even folks who had the documentation didn't need to be bothered to accumulate it any longer because the products didn't need it. Now, with on the backside of the mortgage meltdown that we experienced of 2006 to 2008, it's all about the paperwork again. So a complete file is one that shows every aspect of someone's financial life. So you need your pay stubs, you need your W-2s, you need your 2 months worth of bank statements. If you've been divorced, we need a divorce decree to show if there's an alimony component to your liabilities, things of that nature. So we are once again back to full documentation. And the best thing to get someone through that is good guidance. Is a
that
lender
relationship.
Right. We try to set our folks up very early in the process. Look, we're going to look pretty closely at your life, and you've got to accept that, and we're going to need this documentation. If you can't get it together early on in the process, then things lag and things start to stagger, and that's when people get frustrated. So it's really all about positioning the product, positioning the customer so that they know what to expect. It's all about expectations. But this paperwork stuff is a reality, and we're back to it, and it's going to be here for some time. Yeah.
Okay, well, that's a good answer.
Yeah.
The other question that I had, at what point does it make sense? I know, recently, especially when rates were really low, I got a lot of literature, from my current mortgage company, refinance. But when you figure the closing costs and the fees that go with that, at what point does it make good sense? Should you say, well, if I can get 2 points lower on what I'm currently paying? I think you addressed this a little bit earlier, but is there any kind of a gauge that you recommend?
You've really got to decide what your goal is. It's easy to stand by the water cooler and hear all of your coworkers say, I refinanced at a great rate, this and that and everything else.
I hate those conversations.
Yeah, and they're
especially
very
when I
misleading.
haven't done it.
They're very misleading. You've got to know what your goals and objectives are. If it's payment because you need cash flow help, if it's trying to get out of your mortgage before you retire, and you're on too long a track to do that right now. All of that stuff has to weigh in. Future planning. We love when we partner with a financial planner whose customer is looking at their whole financial health and trying to figure out which component their mortgage plays in that, because that's all global planning that's really, really important.
Right.
Some people might take a higher interest rate, but on a longer term because that suits their cash flow needs. So there's
no cookie cutter approach. That's the bottom line,
It's
right?
different for every single person. It truly is. And for the home buyer, the person who's looking to buy a home, with this raising of the interest rates, a lot of those folks have said, oh, I've missed it, I'm out of it and stuff. But you really have to sit and analyze your entire, why are you looking to buy a house? If it's just because we're offering low rates, well, I would suggest that you're not really mentally prepared to do it. But if it's your lifestyle and you want to enjoy the benefits of homeownership, rate really doesn't matter. You may qualify for slightly less than you did before, but that might open your eyes to a whole new housing stock that you may appreciate better that you had closed your eyes to before. So it's very individual and for every single person.
You've kind of switched us to the home buying market. I mean, what is the market right now in this area in the valley? What are we looking like? Values high, values low, timing wise? I know you don't have a crystal ball.
No,
I'm not asking for predictions, but just from a citizen standpoint. I mean,
I don't have a crystal ball, but I will say this. Since early this spring, we have recognized a marked difference in people's attitudes towards housing. The last 3 or 4 years were very lonely for the realtor community, et cetera, because people were afraid. They didn't know if their jobs were going to last through the recession. They didn't know if they could afford a payment. They didn't know if they should upgrade or downsize. And this whole year has felt very, very different. And it's not just the bankers saying that, it's the realtors, it's the people who see housing stock move. So this has been kind of a fun year because people have been kind of shaking those cobwebs and getting back into the game. And we've seen the benefits of that. A lot of folks have been able to purchase where they couldn't before. Prices are still stable. They haven't yet started to rise incredibly, but they have started to rebound. So a lot of folks are like, okay, we've seen the bottom. Maybe now it's time for me to sell my home and to buy my next home, or maybe it's time for us to get into the game before prices take off too much. And through it all, rates have stayed relatively low. So that's been really, really important, and it has helped in this area especially, and in Connecticut as a whole, it's really helped. The other big thing, Anne, is we're kind of getting through that whole foreclosure cycle.
Yes.
We had such a gluttony over the last 2 years of houses that were pending foreclosure or pending short sales, and so nobody knew what to do with it. It was very, very scary to get into for a buyer to think about buying a home that was in short sale or foreclosure, because it was taking lenders 5, 6, 8, 10 months to decide to sell the home to that person.
Right.
And now we're seeing that start to finally flush through, and that's positive for the housing market in general. If nothing else, it gets a lot of those distressed properties off the market and into hands of people who will take care of them.
Right.
And that's
right.
critical.
And that's not only good for you, that's good for your neighbors, it's good
Absolutely.
for property values, it's a win-win for everybody. Matt, I like what you said about the fact that you work closely, let's say, with financial advisors, and then you mentioned that you have a team approach with realtors too. So you're not just this brick and mortar bank isolated, bringing the consumer in and saying, okay, here's the deal. It really does take a community approach in order to make someone feel comfortable. I mean, these are huge decisions. These are life-changing decisions and long-term decisions that, people really need that kind of, grassroots approach to, I would think.
It's a relationship business.
Right.
These days, I wouldn't hire a plumber out of the Yellow Pages.
Yellow Pages, what are those?
Well, yeah, fair enough.
You just dated
fair
yourself.
enough, you're right. But I want to know that my neighbor used that plumber and had a positive experience. Yet you'd be shocked at how many people we see who come to us after having a bad experience with a lender that they chose because they got a card in the mail, or that they chose because they saw an ad offering $100 off.
Those
an appraisal.
marketing people.
I know. But the truth of the matter is, this is the largest financial transaction most people will make unless you're going to buy and sell a business in most cases. So to work with someone that you trust, that has a track record, is critically important. And we are always available for free information to just analyze someone's situation. Every community bank in Connecticut is willing to do that kind of work for folks. And to enter into a relationship of this nature blindly just doesn't make sense in my book. So it is very much a relationship business, and there are too many twists and turns throughout the process where if you don't have someone you can count on, you're really risking going down a wrong road.
I haven't asked you this before we started the show, but do I have permission to share my story in my experience, recent experience with Simsbury Bank? Sure. And this is real. And one of the things that happened was my son, 25 years old, college graduate, still living in my basement, love him, but time to go. So he was one of those people out there searching for pre-qualification and searching for a mortgage, went through a mortgage broker. And I called you up because we have that, business relationship. And I said, you said, yes, let me take a look at it. And the bottom line was that you found lower fees, better rates, than he was offered in the past, and that relationship, which for this poor young guy, it's a big decision for all of us, but this is really agonizing. He just can't believe that he's going to have to pay all this, and the mortgage, the condo fees, and all that. So I just want to say that it was just such a relief for me as a parent to know that my son, who's been saving, and working really hard towards this goal of being a first-time home buyer, came out of that experience feeling so comfortable and just so well taken care of, and kind of, taken through the process without, here you go, sign this, do that. I mean, it was just, there's more of a touch and feel to it, which I appreciate.
And thank you for that. And to your credit, Anne, he's done everything correctly.
Good.
And it's great to work with buyers like that who have taken the time to get themselves in a situation to do what they're willing to do.
Just be glad we don't have a hidden camera in
right,
our house. You didn't see the reality show
sure.
behind that.
But he did everything right, and now he's reaping the rewards of it. I manage a team of 14 originators, and I say to them all the time, towards that relationship part of it, if you have someone in the process and you have nothing to report to them, give them a call and tell them you have nothing to report to them. Because it's that whole thing. If you're waiting a week and not hearing how your mortgage is going, now we know this is a 30-day process. And there are weeks that might slip by where you're waiting for an appraisal to come back, or you're waiting for something to come out of underwriting where there's nothing to say. But your son or some other borrower is going about their day thinking, gosh, I hope everything's okay with my mortgage. And to get a call from their mortgage person saying, you know what, I've got nothing to report to you today. Joe, that's not your son's name, and I did that intentionally. But we haven't forgotten about you, and everything's going great. Is really, really valuable. And that's where I think, relationships go sour, is when people are left to guess and to wonder. And in my opinion, the customer shouldn't be worried about this. That's why they hired a professional to take care of it for them. if they've got to check in on us, we're not doing our job. And that's
Absolutely.
critically important. It's a emotional transaction and should be treated with care.
So where should people go to find that good fit? Do you suggest they go to the internet? Do you suggest, like you said, it's word of mouth? I mean, where does the business come from, and when does it work out best?
Yeah, I'm not a believer in this regard for the internet. I use the internet all day long. I do. I order my groceries over the internet, and they get delivered to my house. Yes, but this isn't one of those times when I would use the internet. The thing about the internet is I can post anything I want, because in this business, rates are as good as the moment that they're posted. Fees are as good as the moment that they're posted. So there's nothing to keep me honest. There's nothing for me to say to you when you do call me, hey, I can give you exactly what I promised, or here are the millions of reasons why I can't give you exactly what my website said. So getting back to the relationship thing, I wouldn't trust this transaction to an online type of a situation. I think people need to go to the people they trust. So if it's your local lender, which of course we advocate, or if it's someone else that has had a good experience with a lender and they can refer you to that lender, that's where you need to start. And you know what? We're not afraid of you shopping around. We're absolutely not. I mean, I don't go blindly into things, especially something this large. So we're not afraid to have you shop around. What I would encourage people to do is to, once they get information from however many people they're asking, to give those folks a chance to answer to whatever they've been given. Your son's example is a good one. We were able to look at that and save him, I think it was something like $1,200 in fees.
Right.
And to be able to do that, and to have him, if he came back to me and said, well, geez, the other lender said this is why you're telling me this, I want the chance to defend myself. But all too often we fall for that sweet talk, or we fall for that great offer, and we don't really do our due diligence.
Right.
So I would say start with someone you trust and allow them to explain thoroughly what they're offering you.
But
and then make a sound decision.
That makes sense. And one of the things that I also learned from my son's process is that he locked in with you at a rate that's good for 30 days. As luck has it, the rates went down again slightly during that grace period. I said, can't you jump out and do it again, or lock it? And no, you're locked in for that rate. But again, it's the game. It's not a game, but it's the chance that you take. They could go up, they could go down. Right. And had they gone up, he'd be going, yay, great timing. Right. But it's better than the alternative.
Here's what I always tell people. You have to make the best decision you can with the information you have.
Right.
And if you are comfortable with that rate and that payment, it's not our fault that rates went down. Right. So we're hedging our bets against what you did lock in, and we expect you to honor the commitment that you've made, much like you expect us to honor the commitment we've made. And that's what we say all the time to people. We're like, geez, if rates had gone up, you wouldn't be calling us saying, hey, you know what? Yeah. You're not getting a fair deal anymore, so will you raise my rate?
Right.
So it's important that both sides recognize that this is a contract, and that they've made a decision based on the information they had, and that they honor their contract. And he did call me and ask about it, and I wouldn't hold that against him.
I had something
and
to
we
do with
explained
that.
it. I'm certain you did. We explained it,
Right.
and he was gracious enough to accept it and understand that he entered a contract. So that works out all right.
So what is your best advice for people right now watching the program, whether it's refi, whether it's selling, buying? What would you suggest?
Don't put your dreams on hold, and I don't say that to be dramatic. But if you want to have the first home, or if you want to downsize, or if you need an extra bedroom, there's tons of this chatter out there. Oh my gosh, rates went through the roof, and let's put this into context. They're at 4 3/8, 4.25%.
Still historically low.
Yeah, absolutely.
Right.
My parents had their first mortgage in 1986 at 16%,
Whoa.
and they paid 2 points to get it. I mean, it's Reaganomics, trickle-down economics, whatever you call it. But we're nowhere near there. So we've got to put it into context. And for a first-time homebuyer especially to say, oh, you know what, we missed it, I'm out of the boat, you're never going to see it again. It's never going to be at 3.25 as far as we can tell. So you've got to take advantage and stick to your goals and your dreams and follow through on what you want to do for your family, not just because rates took some dramatic turn.
Right. And we could continue this conversation for hours and hours. There's so much to talk about, but that's the beauty of this program, is to kind of cut out a piece of information and really flush it out a little bit for the consumers out there, so that hopefully we've answered some folks' questions and some of their concerns, and had them at least get into the process of thinking about what they're starting that discussion about what to do, because again, timing is everything. So I'm going to switch gears a little bit.
Fair enough.
So speaking of moving and a new home, I understand Simsbury Bank has a new roof over their head.
We do. We used to be at 760 Hot Meadow, which is right next door to where we are today. And we've moved to 86 Hot Meadow. And quite frankly, we had outgrown our old space some years ago. and the lease happened to be up this year, so it was time to find a new home. I benefited the most from anyone in the organization because I didn't have an office in the old building, and I was remote, and so now I'm with everybody, and that's been terrific for me and for the folks who work for me. But we're at 86 Hot Meadow. It's a very functional, modern space, and it's quite comfortable. We sacrificed a little crown molding for high-speed internet, and that's good for all of our customers.
Yes, yes.
So I live in a 100-year-old house, and I just go home to get my crown molding. But we're very happy there. We're still in Simsbury, which was so important to us, and helping the community and being a partner in this community, and it's been terrific.
So what about the technology? I mean, as a community bank, I guess another question is, how do you keep that charm and that relationship-based business, but yet still offer the bells and whistles and the technology that people really desire today?
Yeah, more than desire, they need it, right? I mean, you've got a demographic of 16-year-olds to 100-year-olds who need banking services. And the 16-year-old isn't going to necessarily want to walk into a branch. They're going to want to get on their phone, and they're going to do what they want to do. So it's really, really important that we as a community bank get up to speed on all of that stuff without sacrificing the stuff that we're good at, which is being the hometown local lender that people can come to and trust. And so, we've got to move with the times, and we've done that. This new space is state of the art, and it's wonderful to have. And with it comes broader access to broadband and higher technology. And we're introducing virtual banking in the beginning of next year, which is very, very important to our younger customer base. So we're there, and it's great to be able to offer that stuff and to have the customer base that moves with us and lets us do that. It's terrific. So we're excited.
And you're growing.
Yeah, we are growing.
And you're growing. Yeah. So with this mortgage business,
yeah.
So people throughout the state of Connecticut, all aspects of the state, and into Western Massachusetts, you said in Rhode Island, correct?
Yeah, we can lend on any property in Connecticut, Massachusetts, and Rhode Island. One of my loan officers is from Cape Cod, and she's got a ton of contacts still out there. So we're excited to be doing some loans out of Cape Cod. Another one of my loan officers has a connection on Nantucket, and we're looking at some stuff out there. So we're really excited to bring the Simsbury Bank brand to other parts of New England because we feel like we have something that can help people. So we're really excited to bring it to their doorstep.
One of the other questions I had is that we've been in the midst of, a lot of things have been going on, in Washington, D.C., from government shutdowns to, just that uncertainty, that political uncertainty that we've all been listening to on the nightly news and living with on a daily basis. What is your advice for people as it comes to just, normal, regular, day-to-day banking? Is it don't panic? Is it keep your eye on the ball? Is it, take what you see on the news and analyze it? I mean, how do you as a team at Simsbury Bank deal with all that? Because I would imagine because you are so approachable and people actually walk in to see you, they're asking, your associates, what should we be doing?
Yeah, I had an epiphany this morning. I was stuck in a little bit of construction traffic on Route 10 on the way in, and I kind of sat back and I said, everybody's just going about their business. The government shut down, but we still have to live our lives and operate. And then I got to the office and I had an email from my uncle who's literally with a tour group of 34 people locked out of the Grand Canyon right now. And I said, wow, it isn't business as usual for everybody, is it? I think the best thing you can do is be well advised, be well informed, and live your life. So to your question, if someone walks into one of our branches and asks how this affects what we do on a daily basis and their lives as a customer, we're going to try to give them an honest answer. From the mortgage standpoint, it does have an impact because we have something called a 4506 transcript that we have to send in on every loan to the IRS. The IRS right now isn't looking at those transcripts. They're in a skeleton crew, and we've been notified about 3 or 4 weeks ago, quite frankly, that if the government were to shut down on this date, these things would be delayed. So we've been informing our current customers that, hey, if we don't have your 4506 back, we might have something we need to talk about. And it's important that we inform them. Every customer communication can't be just a positive one. Sometimes you've got to give bad news.
Yes, you do.
And I've always been of the belief that you deliver good news fast and bad news even faster.
Right.
Because people need to be informed.
The longer they wait and go without knowing, the worse it gets, right?
So we're all crossing our fingers that this is a blip on the radar and we get back to business as usual. But in the meantime, we're just going to try to keep people informed.
Wow, that's great. And how can people reach you, Matt, if they want to talk to you personally or meet with one of your loan officers? What's the best way to do so?
Yeah, the good news about community banking is we're very, very accessible. So simsburybank.com, simsburybank.com /mortgage as well. I have no problem with people using my personal number, which is 860-655-3923. Am I allowed to do that? I don't know if I'm
You
allowed
can
to
do that, and
You
I
asked,
can
so I'm
and I can tell people he answers it. I've used it a few times.
Yeah, I mean, we're a community bank. That's it. We're your farmer's market for your financial services.
Absolutely. Well, I hope that you'll be back again,
I'd love to.
and talk to us about other issues that arise. And, people kind of let us know, too, what's of interest and what would they like to have a longer format discussion about, as opposed to a couple sentences in an online publication or a soundbite on a newscast. Right. This has been very interesting, and I think people really enjoyed this conversation. So
It's been a pleasure for me. Thank you for the opportunity.
Thank you, Matt.
All right.
So again, if you'd like to get professional advice, and all you need to do to find out more about refinancing and loans, you can call Simsbury Bank. Their number is 860-658-3365, or as Matt mentioned, you can go to their website, simsburybank.com. Again, thank you, Matt Morrell, for being on the program, and thank you for watching this edition of Money Matters. I'm Ann Baldwin.
Funding for Simsbury Community Television is provided in part by contributions from viewers like you. Thank you.